Alright, so hey guys, we're back with another edition of Strategic Real Estate Coach TV. And today what I want to talk to you about is an alternative exit strategy when you are buying foreclosures and doing improvements and selling them. What if the house just never sells? What if you've done the perfect job of buying it right, of fixing it right, and getting it on the market, and for just some reason, it's not selling? Well, here's what we do. We buy properties in an area where we can acquire them, the purchase plus the rehab, for about $70,000 to $90,000. And our after repaired values are between $125,000 and $160,000. And so what this allows us to do is when we're into a house for $70,000 or $78,000 or $85,000, is to easily be able to turn and work on a different exit strategy. And so we of course want to sell all of our properties to retail buyers. And those retail buyers, when they buy and they cash us out, we're paying off our principal, we're paying off our investors, we're paying them a very, very, very good rate of return, usually 12% or more. And we're also pocketing $40,000 in our pockets. But what happens if we never sold a house? This has never happened to us before when we got stuck with a property, but what if it did? So here's what our plan is. Anytime we're looking at a secondary exit strategy, we're always thinking rent to own. We're always thinking lease option. The reason why is a couple things. Number one, we get premium rent. We get top dollar for rent. Number two, we get an option deposit of between 5 and 10% of the purchase price. So we get a substantial amount of money down. And three, we sell the property for full price. Okay? So like the house we're standing in right now is 4034 Manchester Road. We're only into this house for $70,000. It's on the market for $125,000 right now. So we got $55,000 profit in this property. But let's just say we drop the price, we drop the price, we drop the price, and it just never sold. Okay, I guess it's possible. Even though we have so much meat on the bone, it's possible. So what would we do? Well, here's what we would do. I would take the property off the market for probably 2 weeks. Then I would come back 2 or 3 weeks later with a property launch specifically geared towards rent-to-own buyers. So I would do a week's worth of marketing. I would do all of our property launch marketing, including text blasts, email blasts. I'd have the property on TV. I'd have signs in the front yard. I'd have monkeys dancing around in the front yard. I'd have clowns everywhere. I would open up this house and relaunch it to the world in the MLS and everywhere else, but I would launch it as a rent-to-own property. And what I would do is I would jack the price back up as well, back up to what I think is maximum price. So right now we're at $125,000. I would jack it back up to $139,900. The reason why is because a retail buyer might want a little bit of a discount today. A rent-to-own buyer is not going to be buying the property for 1 or 2 years from now. And so we can ask them to pay full price. So we make the most money when we do rent-to-owns and when we do lease options. And that's our primary exit strategy. So let me give you an idea of the numbers. So we're into this house for $70,000. If we had a new investor come in and do basically a private mortgage refinance, we would replace the existing mortgage of $70,000 with a new mortgage of probably $95,000 to $100,000. We would pay off our investor, pay them their principal, pay them their interest that they're due, and then we'd have a new note on the property for $95,000. Well, we would also be able to pocket about $20,000 into our own pocket when we did the refi. Okay, now we're into the property for $95,000. We would then have a new note on this property for between 8 to 10%. So let's just say 8% on $95,000 is approximately $7,500 a year. That's about $625 a month. You add in the interest plus the taxes plus the insurance, and we would probably be into this house for about $850 a month. Okay? We could easily sell this property on rent to own and get $1,200 a month or $1,300 a month in rent in a rent to own situation. So we're into it for $850 and we're out of it for $1,200 a month. And we have plenty of monthly cash flow. Second, the buyer is responsible for water, sewer, electric, gas, phone, cable. They're responsible for all the utilities. And so we are truly getting $350 a month in positive cash flow. So we've yanked out $20,000 of equity now. We're getting $350 a month in cash flow. Plus we're going to get 5 or 10% down from our buyer. So if the buyer comes in and gives us, let's say 5% down on a $140,000 house, that's $7,000. So we're getting another $7,000 down. So in that first year, we would get about $20,000 from the refi, we would get about $4,000 from the cash flow, and another $7,000 down from the rent-to-own buyer. So we've just stuffed about $31,000 in our pockets as an absolute worst exit strategy. The absolute worst possible thing that could happen if this house never sold, we're still going to make $31,000 up front. Then, a year or two from now, we're going to sell this property to the end buyer. They're going to get a bank loan. We're only into it for $95,000 plus the $7,000 they gave us down, so we're actually into it for $102,000, and we're out of it now for $139,900. And we're going to net about $128,000, $127,000. So we have an additional $25,000 to $30,000 profit when we sell in the future. So that's why I say we make the most money when we do rent to owns, because we'll make about $31,000 up front and make another $25,000 to $30,000 when we sell, for a total of $60,000 profit from this deal. And that includes all of our expenses, including paying off our private lenders, the first private lender and the second private lender. So to make $60,000 as a secondary exit strategy is pretty darn good, okay? And so that's our plans. If one of our houses never sells, we will do a cash out refi and a rent to own, and we'll be golden every single time, okay? So to learn more about what we do at Strategic Real Estate Coach, especially exit strategies and how to get out of your houses and make a lot of money, whether it's retail or rent to own, what I want you to do is go right now to strategicrealestatecoach.tv and apply for our one-on-one coaching programs. Our one-on-one program, we will show you exactly how to acquire real estate with no money down. We will show you how to improve those properties by outsourcing the improvements. We will show you exactly how to sell your properties through a property launch. And at the worst case, if you can't sell the home, we will show you how to do a secondary exit strategy like a rent-to-own lease option and make even more money as a backup, okay? So check us out at strategicrealestatecoach.tv. Go to the right side of that page and opt in, fill out our coaching application to be part of our coaching program, and I will personally mentor you so you have success in real estate. Again, this is Josh Cantwell. Thanks for watching our video about alternative exit strategies, and we'll see you soon. Take care.